Hello traders, how are you? Vladimir here from Traders Academy Club. In this video I want to talk about this exact subject which I call fail to plan, plan to fail. What does that mean? Because nobody really plans to fail, right? So I would really want to explain what do I mean by that. You probably heard this quote in different connection, um, different variations, but the idea here is very straightforward. Unless you plan your action exactly, don't expect some significant success. Okay, and the reason for that is very simple, and that's exactly what I want to talk about this video. But before I do that, I would like to welcome you to our channel if you watch us for the first time. So first of all, welcome to our community. Please subscribe to the channel, just follow the subscribe button below this video and remember to enable the notifications. And also I would like to invite you to follow us in our trading club, the Traders Academy Club. You can also follow us in our Telegram channel and the links to both could be found below this video in the description or in the pinned comment in the comment section. Also, I would like to ask your help. That's how YouTube algorithm works. So your support and your help is very much appreciated. Please hit the like button. Let me know what do you think about this video. If you find them educational, helpful, please drop your comment in the comment section. Also, if there is a specific subject you want me to talk about in my future videos, if you want me to cover something that could be helpful for you, then please let me know in the comment section and I will add it to my list. Okay, so thank you very much in advance for all your help. Very much appreciated. Now let's start. So what does all that mean? Fail to plan, plan to fail. Now look, there is nothing wrong with spontaneous, right? And I also love to be spontaneous. Like when friends or someone from family, say, Vlad, you wanna go there? Sure, why not? Let's have fun. But there is a big difference between do random spontaneous things for fun and do something that's supposed to deliver you money, cash flow, okay, your business. You can't do randomly business like, you know what? Let's charge 20 bucks for a pizza, or let's charge 50 bucks for a pizza. You can't just throw numbers and you can't do something which is unplanned. Whatever the business you do, especially for trading. Trading is a very serious business of probabilities, of statistics, of numbers. You deal with real numbers here. So you can't say, you know what? That looks like a sell to me, or that looks like a buy to me. Okay? Let's go and make a buy or a sell. No, that doesn't work this way. Okay? It might be for a few trades, and you might get lucky. You might get some good runs, right? But it's not a strategy to work with. Randomity without specific plan would simply cause you to fail. What do I mean by plan? Okay, plan is everything. Plan is from what levels are you looking to trade, on what direction are you looking to trade, what is your entry plan strategy or strategies. Okay, there, because some setups on the charts could basically allow you to enter with different techniques, so you have to choose the one that you feel the more relevant for the specific analysis, per specific situation in the market, right? And mainly, and this is the biggest failure of traders, especially those who just start their journey, how to exit. Plan the risk, plan the exposure, and plan the management. What do I mean by that? Most traders, when they just start, all they do is, oh, that looks like a sell, or this guy told me sell, or this guy told me buy, let's sell, without understanding how much money they really risk, without planning their exit plan. What should happen on the chart in order to get out of the trade? How to cut a loss? Okay, how to avoid a bad setup? All that must be planned in advance. If you fail to plan these things, you literally plan to fail in your trade. Because what you do in that case, you just randomly trading. You're not prepared. You have no idea if that's what you do, right? You have no idea how much you risk. Just randomly with $1,000 open one lot or half lot without having an exit plan is a mistake. It's a terrible mistake, and that will lead you to very bad, terrible experience in trading. Because if it's enough to have one trade that goes against you and you have no exit plan, whatever it is, stop loss or cut or whatever, right? How to manage your exposure. Unless you have a specific plan, you might wake up one day and find yourself like, oh my God, what is going on? What did I do? You don't want to be in this position. Trust me, I've been there. I did these mistakes in the past. Most traders did. Nobody find a success by doing random trading. So you want to have a very specific plan. And I want to cover these things, okay, and explain. For that, I will present 2 trades we discussed in Traders Academy Club. I take them directly from the report. This report is exactly what our users get, the Traders Academy Club members, okay? So let's scroll down. And I will want to take from 2 different reports 2 trades. One of them is going to be the New Zealand CAD. One of them is going to be gold, okay? So let's take a look on the first one, New Zealand CAD. Okay, the plan was very clear for us. Okay, I'm not going to dig into the technical analysis here, but what we found was 3 lower highs, lower lows, allowing us to see A, B, C, D correction. This area right here was holding and was holding impressively, as you can see, right? And after it failed to hold above, you see what happens? It breaks down, right? Breaks up and breaks down. That's a good sign. So break below this low should be a good sign for continuation. So for me, the validation plan is right here. I am looking for my sell opportunities once I validate my bearish view by break this low, okay? So once again, once this low is broken, I'm looking for my opportunities. Alternatively, what is my exact plan? Now look, I'm working with the ABCD here. Break above this ABCD would make it not ABCD anymore at that moment. Maybe later on it will expand for that. I don't know. I can't predict. But at that very moment, if this high is broken, that's all. Right? So this is my exact invalidation. And what to do if you get involved, if you go more aggressive and you say, okay, you know what? It failed to break. I'm going to smash it here. So I'm going to protect this high somewhere. Okay, that will be my plan. And then what happens is this breaks. You see, that's the plan. That's where you cut your losses. And it doesn't matter if you are in break even, small loss, small profit, whatever the entry is, doesn't matter. What matters is you do not stay in the wrong places in the market. When the market proves you wrong, get out. Don't try to convince the market, but you know what, maybe it still should go down. No. When the market doesn't follow your lines, not the market is wrong, the analysis is wrong. Step back, accept it. It doesn't matter small loss or small profit or break even. Everything is better than a huge loss because you failed to listen to the market. If you rely on the market to take you into the trade, rely on the market to take you out of the trade and follow its signs. Okay? So this is a specific plan. You see that? Specific plan. That's very clear. So even if you attack here aggressively and then you say, you know what, I protect here, this is the pattern, I'm going to respect this high, and then, okay, happens, right? The market not always follows. Cut, accept, okay? Take a look. This is the key we cut. Here we are. We break this high right here. Now what's going to happen next? I have no idea. I have no idea. No one does. I'm not Nostradamus. Right? I have no idea to predict what's going to happen. Maybe it's going to rebuild ABCD then. And then smash this low. I don't know. But what I do know that at that very moment, the market proves me wrong. So if I'm involved, I cut. If I'm not involved, I invalidate and I stop looking for my setups. Simple, straightforward. Okay? Don't force the market to do something it's not about to do. At that moment, how tomorrow would look like, we can't predict. You don't know. Nobody does. And I want to take the second example, okay, from another report, also from the Academy directly. Okay, now take a look on the gold. Our plan is very specific. We want to see the market completing 2 waves on a daily chart. I'm not going to, again to explain the logic behind of the analysis. I invite you to Traders Academy Club. learn all these techniques we use both for analysis and for trading strategies. Okay, everything is available for you in Traders Academy Club. But what I just want to present you here is exactly what I say in the title, in the subject. Okay, what happens when you plan, how a plan should look like, and what mainly happens if you don't plan. Okay, so that was the plan for the gold, and here is our action plan. Very straightforward. We got same story, same strategy. Okay, divergence, ABCD broken. We got a retest of the line. That's all. We expect further move down after this ABCD was broken. So we expect to see new low, right? And we want to see this low being taken. And that's it. That's what we want to see. After that, we are going to follow the management until there will be bullish divergence or opposite signs that the sellers are out of the game. Let's take a look on the real chart. Where do we stand? Here we are. Okay. So that's it. Now you see that, right? Moving well. That's all. The plan follows. Now I am free to do and follow my plan. Is there a sign against me? Some divergence against me? No. Is there any stoppage and higher highs, higher lows to take me out of the trade? No. Is there any false breakout here and convergence turning up, higher highs? No. So that's it. I can take my stop loss to break even. Risk free, and that's all. I'm free to carry. My plan follows, right? I have my plan and I follow my plan. If I don't have my plan, then as you saw with the Kiwi CAD, who knows what could happen, right? I don't know to predict what's going to happen here. Maybe we are going to fly for a new high. Maybe it's going to recreate it, but I don't know. But I do know that once it breaks, I don't want to be involved. I don't want to be there. Here, I don't want to be there. It has the chances against me. Very simple. You see the differences, right? You see the differences, guys. And that's what I want you always to remember. When the market would make the move, the market will make the move. And it will move. And you will enjoy your profits. Risk-free, that's all. Let it go. In a good case here, we are going to complete the huge movement we were looking for. Pardon. If the analysis is correct, and I say if because again nobody knows to predict, then I'm going to see the next levels. And here, and if it breaks through, I don't know how it's going to behave, right? Maybe this is going to be divergence here. I don't know to predict. I follow for a fact, and that's my plan. I will ride it as long as the market tells me get out. In that case, it works in my direction, not like the Kiwi CAD. So Kiwi CAD, not involved, invalidate. Move on. If you are involved, cut. The earlier you accept it, the smaller the losses would be. Very straightforward. And I want you to remember a very important thing. I'll go blank screen right now, okay? I want to show you here a very important thing, and I want you to remember that always. Most traders think that in order to reach successful trading, you need more of this column. While the reality is, you need less of this column. The reason? Very simple. Why? Because you can't make the market make the moves that it's not ready to move. You can't make, if you want to get 200 pips profit, you can't force the market to do that. Right? The market will do what the market will have to do. So you can't expect more pluses if the market doesn't move. So what you can do is control your losses. So let's say you have here plus 1%. I'm just going for example, okay? Plus 1%, minus 1%, minus 1%. So in that case, you are break even, right? But if you manage this trade and you cut earlier, and instead of 1%, you cut it with 0.5%. And the next one you cut even earlier, 0.3%. Look what happens. You saved here 0.5%. You saved here 0.7%. So your total loss here minus 0.8 instead of 2. Remember, it was 1 and 1, it was 2. That means you still have 1.2% saved, and it goes here. If it's not loss, it stays in a profit line. That's it. And I always want you to remember that, because most traders want to do, they randomly attack just by saying it will be fine, it has to go up, it has to go down, he said, that said, blah, 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 blah. There is always a reason. So my friend, do not forget to plan your trade, not just to buy when someone tells to buy or to sell when someone says to sell is not a plan. Okay? A plan is knowing exactly where you enter for the buy and why you enter for a sell and why, and mainly how you would get out if things get wrong. That's a full trading plan. So let me know what you think about it. Feel free to share this video with anyone you want. It's free and open to the community. I hope it helps. I hope it makes you think properly and differently. Because again, the common mistakes, you know, nobody wants to talk about them. They are very important things to be discussed. And I hope you find it useful and helpful. Thank you very much for your time watching this video. I wish you wonderful trading, and I'll see you soon in other videos, other content. And once again, I invite you to join us in Traders Academy Club and to enjoy from all the real-time education we have to offer. Thanks, and see you soon.